okay, are joining us actually, without noticing that they are joining this. You know how much, or how many people are not in the banking industry in some countries, or don't have a bank account? You know, in some countries, this percentage is going to up to 69% of the population of some countries are unbanked customers. This means that 70% of the people almost are unbanked, and only 30% of the people have bank accounts. Egypt, Morocco, Brazil are these three samples of these countries who has less than, let's say, 30% of the population, or about 30% of the population only having bank accounts. Can you imagine this? For us as bankers, this is a disaster, because I cannot reach those people, I cannot afford my services to majority of the population. This means that it's a business loss for me. It's an opportunity loss. So how we can include those people, and this is what we call financial inclusion, is by providing financial embedded finance to our financial services embedded within the customer journey for retailers or those service providers who are not actually banks. And today we are in the era of fintechs, TPBs, in open banking and banking as a service, and this is really benefiting us here to grow. Okay, so today we are talking about offering a one-click payment, just like the e-commerce. You can understand that Amazon and Samsung today are providing account opening within the journey without being noticed by the customers, as this is an account opening process. Okay, so here we can allow every company actually to work as a bank or a financial institution, okay, without being labeled as a financial company. This is the beauty of embedded finance. And for sure now the journey is a little bit different. So here, here the customer can see the application from one side, and what is behind the application is completely different. So there is one company, third-party company, giving him this application as a front end, but in the back end there is a bank actually providing this service. So the front end is becoming now completely different from the front end that you used to see when I look into a bank account. I have to be regulated with such kind of, username and password, OTP, multi-factor authentication, these kind of things. Today you can have this within Careem Pay, within Uber application, within Amazon application. So you don't have to do a lot of this complexity of regulation. However, there must be some minimum KYC happening between the bank and this service provider in order to allow you to use these financial services. And today, banking as a service, allowing banks to provide all their services which we have today in their applications to these third parties and fintech companies to enable it and provision it for their customers. So for example, today, Careem, for example, they are paying out their drivers using our service in Bank Al Bilad. So what they do, at the end of the day, instead of that the captain used to wait for 1 week to get his money or payouts, he can request it at the end of the day within few seconds, less than half a minute, he can get the payout of what he has done today. So he don't have to wait for a week to get his money. Sometimes they have families they need to support, they have to do some maintenance for their cards or whatever. So that was a pain point for them before. Today, Bank Al Bilad is giving this as a payout solution, which is embedded within the driver or the captain application without him noticing this. Okay? So this is some sort of embedded finance. And now we can start noticing how it is going to change the lifestyle and the value of the different applications and services to the end user or the customer. That captain from Careem who was having a pain to fulfill the economical or the financial needs through the whole week until he received the money back from Careem. Now he's able to get the money within a few seconds after he finished his work for 8 hours, 6 hours, whatever. Okay? So, banking as a service, open banking, we have technology and capabilities, we have regulation, and this is the hard part of it, and it's always and that we had that discussion in the previous panel, it always limits our innovation. We cannot do a lot of things because of the regulation sometimes. That's why whenever we had a discussion with the central bank, we try to make a change to the way that they are accepting the risks, and you can see how much sometimes the regulation is limiting our capabilities to do more. Sometimes you have to fill, let's say, 50 fields while opening the account because of the regulation. If that could be made simpler, that would make even the life of the customers much easier. Okay, so today marketplaces are possible also because of the embedded finance. You can, within a marketplace, you can get the financial service from the background here, from the financial organizations, while the marketplace itself, like Amazon, for example, is not showing you that there is a complexity in the back end. So you don't have to feel this, because this has to be seamlessly provided to the customers. And this is thanks to the embedded finance again for allowing all these embedded services to be within our marketplaces. For example, you can have auto marketplace where you can buy a car and then you can pay in installments. Without you are just coming to buy a car. Okay? But within the journey, you can get an auto finance from a bank. This is going to be embedded within the journey. The auction, for example, is a good example of a marketplace where people can get or buy used cars, just maybe a very brand new car but just being used for a few weeks or so from the marketplace without being the consequence of going and traveling across the country or the city to get the car that they want. But as I mentioned, Amazon started this in 2011 with some banks here, Goldman Sachs and other banks, to provide these services in multiple countries, and they have started with financing the suppliers or their service providers who are giving them the services. So while the guy is, or the company is processing an invoice, they can just get this invoice in installments, or they can get a finance for this bill. So they can get this embedded finance service within the journey of checking out. And this has been there for a while, and the total funding was, let's say, more than 1 billion in 2019. So you can see how big it was. Today, the traditional banks are suffering from Basel regulation, from their old model, from their legacy systems, from a lot of things that now we need something to help them to grow. How they can grow? By allowing these partners to provide some other services to their customers so they can get indirect revenue out of these embedded finance services. So today we are working with, let's say, with any pay application. This pay application is going to provide some services to the customers, and that service at the end of the day will go through a financial service provided by the back end, which is a bank who can get this portion of that revenue as a profit share, and that was not going to happen without having this partner working and providing that application for their customers. So this is a simple sort of embedded finance bringing you unbanked customers sometimes. So those 30, 70, 60% of the population who are not banked today, they can start becoming customers of the banks without being afraid of opening an account with banks. And in some countries, I know people who are afraid just to look at the building of a bank. He knows that this building is very hard to deal with. If I go there, I have to sign a lot of documents. Maybe they are not well educated, they cannot understand terms and conditions. All of these kind of, let's say, afraid of, let's say, documentation and processes, they are getting rid of all of this by having financing services embedded within simple applications of the service providers who are maybe just retailers. Okay? This is some statistics about the customers, what they want. As we say that here, 85% of the customers are willing to change their banks for better services. So banks who are today legacy, they will start losing customers, and they have already started losing customers. And for sure, customers are looking for a lot of services that they want from the banks, and banks with the legacy systems, with the traditional way of doing things, with the slowness and the killing processes, hard regulations, they are not able to compete. So now if they start leaving this front end into the service providers who are fintechs and TPPs, who are agile enough, who is focusing on solving problems, maybe one or two problems of the customers, instead that you are as a bank looking at a very long and large portfolio of services and products, and we have a lot of bankers sitting here today with us, and you can understand what I'm saying. You leave this to the fintech companies to focus on solving one or two problems of the customers, and you give them support from the back end. You can share the revenue and have a win-win-win situation for you as a bank, for the fintech company, and for the end user. So it's a game changer. As you can see, today acquiring a new customer for banks and insurtech is 4 times more than just having an e-commerce customer onboarding. Okay? Today, infrastructure is becoming very mature with the banking as a service and open banking, and we have seen Bank Ahmed was the first bank in Saudi Arabia, for example, to provide open banking services for our TPPs. Today we have about 5 TPPs can get the financial transactions of Bank Ahmed customers by giving a consent. So customer will give a consent to those TPPs to get their transaction data from Bank Ahmed. What will happen? Those TPPs will start analyzing your data. They can give you some personal finance management. They can analyze your expenditure, telling you, oh, take care, you are spending much in hypermarkets compared to your peers, for example. You are spending much in coffee and catering, okay? And you can set limits and controls for yourself, so they can give you early alerts about your expenditure. So such kind of services will enable you to better manage your expenses, to better manage your financial, let's say, situation, so you can be or avoid a lot of troubles maybe might come to you in the future because you are not aware of this ahead. So they can give you heads up about your style of expenditure as well. Okay, for sure, pandemic has accelerated the online, let's say, banking and digitalization of our transactions. And this is, I don't want to say thank you to COVID-19 because sometimes it hurts us remembering this, but COVID-19 was a driver actually for digitalization of a lot of things, and this is now is taken into the direction of open banking and banking as a service as well. طبعا banks are looking at fintechs and TPPs competing with them in a different manner. Some of them are not welcoming this trend, and some of them are considering that we have to cooperate together. Instead that we play a competition game, we play a cooperation game, and we can collaborate together to give better services to our customers, which is going to be, as I mentioned, a win-win situation instead of that competing with each other. But some banks are taking the concept of being themselves the fintechs of the bank. So instead of that, I cooperate with other fintechs. I build a subsidiary of the bank as a fintech company to serve customers, and I think that Bank Karachi is doing this today. They have 2 companies for microfinancing and for financing services and a wallet. Instead of that, they are building this with fintech companies external to the bank. So it's a direction and a vision of each financial institution to look at open banking and banking as a service from their angle. Just another figures about digital commerce. We have a record of growth of 22% in 21. The volume has increased from 12.19 billion in 22 into expected to be into 20.44 in 2025 expected growth of 20% of total revenue and 18.8% growth rate annually, which is very promising. So anyone who goes to that business should expect a growth, a steady growth or average growth of, let's say, 18 to 20% annually, which is amazing for anyone who is going to a new business as a startup. So if you are going to a business where you can guarantee that you are having a 20% growth year on year, this for sure is very good for those who are going to think about starting new businesses. Others are talking about SME and corporate loans. Is a very, very optimistic and promising business, and it's not being yet looked at deeply. And we are going to have a discussion today in our session about the future of retail, and we have some speakers from commerce and SME banks. I think Fahd is here, so we can listen to him about how SME and financing of those customers is very important, and it's growing these days. طبعا figures بقى talking about billions of venture capital and being invested in embedded finance, buy now pay later, these kind of services. So you can see that the trend is moving towards increasing the fund and the venture capital for embedded finance. This means that if you have crowdfunding, if you have financing services and solutions, as either a vendor who's building solutions for the customers, or as a business owner, you can expect a welcome, let's say, interaction from the sponsors and the people who are going to invest in such kind of services. Today we have over 473 unicorn companies working across the world, and in Q1 we have added, in 22, we have added 40 companies. This means that the unicorn companies are increasing rapidly. Remember, maybe 20 years ago, maybe old people here can remember this, we have never heard about a unicorn company coming into the world, maybe during half of the year. 6 months, 1 year, you might not hear about a company becoming a unicorn company from being just a startup company or doing traditional business. Today, we are approaching 500 unicorn companies. Can you imagine? A unicorn company with a return or a revenue of over $1 billion US. This is becoming now something traditional. You hear about the billionaires, and they have now, some of them having over 200, 300 billion US dollar personally. So a person owning $300 billion because of these services who are now becoming very mature, promising, customers are trusting them. Yani, who was thinking about Amazon? I request an order, I pay online, and I'm expecting the item to arrive. This level of trust now is there. You can easily purchase anything online, even food, because of that trust. That trust was not there 20 years ago. Today we are at a very mature level, and the people are welcoming these services a lot. For sure, you can see that different activities, they are working on lending, financing, exchange, insurance, financial management, as I mentioned, personal finance management and enterprise finance management. All these sectors are payments, for sure, and I think we had this discussion in the morning about payments. In Saudi Arabia in specific, we have in Vision 2030 expectation of authorizing 550 companies or fintechs in Saudi by 2030, which is a very huge number. Today we are talking about 147 plus, and now over 24 of them are already licensed, and they went out of the sandbox or the certification stage, and they have started providing services for customers. We in Bank Ahmed are already engaged with about more than 10 of them who are either already licensed or in the process of being licensed, and we are doing some testing with them to make sure that they are relying and complying with the right APIs in open banking, so they can start launching their services, as well as those fintech companies who are providing service to their customers, as I mentioned, Pay, for example. Mobile Pay, for example, is a partner of Bank Al-Bilad, so all the transactions done for Mobile Pay, which is one of the largest service providers for telecom in Saudi Arabia, relying on Bank Al Bilad as a trusted bank. This is one of the last slides that we have. As you can see, in 2030 we are expecting 3,500 billion US dollar invested in embedded finance in retail and e-commerce, 6 and 7% in education telecom, 70% in healthcare, and 21% in others like travel, mobility, real estate, energy, and pharmaceutical. So this can show you the figure and the volume of business that we are expecting in the coming 6-7 years. And if you want to be there, please start. It's a very good idea that you start participating in this promising business. Try to avoid going for businesses that you might not be perfect in. And embedded finance can help you doing a lot of business for your customers without bearing the consequence or the headache of providing a financial service itself fully. Thank you so much for your time, and I'm happy to receive any questions, if any.
Thank you, Dr. Darwish. Anyone have any questions on the embedded finance?
So I make it clear?
I have one point to make. So,
Sure.
in the UK, for example, there has been quite a pushback, especially in the buy now, pay later, because it's seen to encourage irresponsible spending behaviors, especially amongst the young, the teenagers. Would you like to comment on that in terms of the responsibility and ethics of buy now, pay later embedded?
True, and it happened actually in venture capital investment. Now it's becoming decaying instead of growing. That was mainly because of the weak regulations there in some countries. And for example, in Saudi Arabia, you cannot get a personal finance or exceed 33% of your income in such kind of personal finance or buy now, pay later services. So we have SEMA, where those companies has to go and check if you still have a margin to get such kind of buy now, pay later or whatever financial or financing services. So the regulation has a very big role to play here, and I believe that in some cases even today we have for sure a framework for open banking in Saudi Arabia. We still don't have the same for banking as a service. So today they are just setting a limit on each wallet provider. The limit of the person shouldn't exceed 20,000 Saudi riyal. But today I can open 5 of these wallets, so I can reach up to 100,000. This has to be regulated again to take that ceiling back to the normal, so I shouldn't exceed that limit in any case. So yeah, I understand this is because the main point of credit cards, buy now, pay later, and some of these services is to remove the pain of paying money. So buy now, pay later as a simple, or in a simple sentence, that you can pay your bill in installments with zero profit. So if you have, let's say, to pay, let's say, purchase a travel ticket from any airline, Qatar airline, for example, and instead of that you pay the 5,000 once, you can buy them on, let's say, 3 installments, 1,600 or whatever each. So that pain of paying the 5,000 once has been reduced or mitigated into paying only 1,600. You get the point? So such kind of pain removal services is dragging you into more expenditure, and you can spend more in sometimes things that you might not be in a need for. And thank you so much for this question. It's happening here.
Anyone else? No? Please show your appreciation.
Thank you so much.